Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Rossari Biotech is the stock on our radar. Reported a flat set of Q1 numbers. Revenue slipped 6% on a YOY basis, while EBITDA was flat. Home, personal care and performance chemicals, they witnessed pressure on a YOY basis. But if we look at the textile, specialty chemicals, animal health and nutrition, they saw some growth on a YOY basis. So to discuss this and more, we are joined by Edward Menezes, who is the Executive Chairman at Rossari Biotech. Mr. Menezes, good afternoon. Thank you so much for joining us. Well, last couple of quarters that we spoke as well, there was some pressure that was seen in some of the segments. Now, at least it looks like that has seen a stop, or at least I would say the decline is not as much. Can you tell us about what is the full year growth and margin target of the company? Are you seeing a recovery when it comes to pricing and demand?
So good afternoon, Sonal, and thank you for having me on your show. The demand outlook for all our three segments, they look very strong now, especially the HPPC segment. We found that the HPPC segment has an uptick in the last quarter, but you see a little bit lower in revenue because there is a price correction there. The volumes are up quite well. Their volumes are up in excess of 15% for the HPPC segment. So the demand outlook for the HPPC segment looks very good. And within the HPPC segment, the cleaning and hygiene sector is doing extremely well. And we are banking on the cleaning and hygiene sector also to do very well in the coming quarters. Textile specialty chemicals has grown over the last quarter a bit. But however, there is a lot of headwinds in Europe and USA, and therefore demand for textiles is on the lower side, as well as there are some problems with forex in countries like Bangladesh, Egypt, as well as Latin America. And therefore, we see that textiles will be still under pressure, and it will require a couple of more quarters to really normalize and go on the growth trajectory. In the animal health and nutrition, we've done very well. We've have also launched the aqua products, and as in animal health and nutrition, the second, third, and fourth quarters really build up very quickly. We are expecting that this segment also will give us good growth. So if you see the margins, we have improved the margins year on year to some extent, and we've been focusing on also capacity filling and capacity utilization. Now, with this capacity utilization, our costs will go down, and we expect the margins to go in excess of 14% for next year. As if you see, we believe that we will grow by about 12 to 14% in revenue, overall revenue, as well as 12 to 14% also in the EBITDA margins.
So 12 to 14% top line growth and about 14% EBITDA margins, right? That's the guidance for FY24, sir.
Yes. Yes, ma'am.
Okay. What's the available headroom for you to increase your capacity utilization, which will help push up margins?
So we are currently between 60 and 65% capacity utilization. We have still 35% capacity utilization available to us. And therefore, a lot of focus is on filling up capacity this year, because now that the EBITDA margins have come online, the raw material softening has taken place, the volatility has subdued now. We feel that in the coming years, with the capacity utilization, we will be able to achieve the EBITDA margins that we have guided and surpass that quite well. One additional highlight of the year is that we have implemented SAP S/4HANA across the group, that is across all our 5 entities, and that is also going to give us a good advantage in the coming quarters.
Mr. Menezes, in your press release, you've said that HPPC segments saw contribution from new segments, the new capacities that have come by. Can you give us a sense of how much of the revenue addition came in because of new capacities? And once capacity utilization also goes up, what will be the kind of revenues you'll make from this segment?
So as I said, in this year we are looking at 12 to 14% or 12 to 15% growth. However, we think that in the next 3 to 4 years, we will be able to fill up the capacity at the Dahej plant and the Silvassa plant.
While you are looking to improve your margins aided by capacity filling, can you generally tell us how raw material prices are likely to trend going ahead? Will they be stable? Yeah.
So in the last quarter, the raw material volatility has come down dramatically, and the raw material prices have softened, as well as there is correction in the top line or the selling prices. But if you look at the last 2 weeks, we've seen there is a steady uptick in the raw material prices. So I think the raw material prices will be steady to slightly more than what they are in the coming quarter.
Mr. Menezes, what is your percentage of revenues that's for exports? I also ask this because a few of the chemical companies we have spoken to, they did indicate that globally there are inventory issues, there is dumping coming in from China as well. What is the impact for a company like yourself?
So our company is not into basic chemicals. Our company does a lot of formulations and a lot of specialty chemicals, and therefore China is not a big competition to us. However, the export percentage is about 20%. 80% is domestic and 20% is export. Except for pressure on textile specialty chemicals for export, I think the HPPC as well as the animal health and nutrition, they are doing very well in export.
Okay, so when we talk about animal health and nutrition, I remember when you had just launched the IPO, you did say this would be the growth driver because margins here are higher as well. What is this as a percentage of revenue right now? And when you say this is a seasonal business, this will improve in quarter one is slightly weak, but it will improve in coming quarters. What kind of growth rates are you looking at? And what kind of margins do you see in this segment?
So the percentage to the consolidated revenue is about 7%. And that is why there is a good room for growth in the animal health and nutrition. So this year, we target about 30% growth in the animal health and nutrition business. And as you know that the gross margins in this business are in excess of 50%. Once the revenues or once the top line increases, then the contribution of this segment will really help us grow in the coming quarters and the coming years.
Mr. Menezes, we leave the conversation here for now. Thank you very much for joining in. That's Rossari Biotech for you. Get into a break. On the other side, we'll get you our mid-cap spotlight stock of the day, and we'll talk about 5-star business finance, which is higher in trade, and the company has gone ahead and upped its AUM guidance. More details on that when we return.